here is an example of a tiered compensation plan for an account executive. If the AE closes more than $80,000 in a month, then the commissions are a higher percentage. This is what 12 months of earning would look like with this tiered comp plan. You can see in March, the rep closed $105,000 and the corresponding commissions at 8%, and then it bumps up to 12% and then 15%. So my last video on software sales was really good, but it had one problem. I just made a big mistake and put the best part of it at the end of the video. I talked about comp plans in section 4, basically how you make money in software sales. And as you can see by this retention chart, most people didn't watch that section. So that's all good. I actually came up with a better idea. Why don't I just make a whole video about comp plans and making money in software sales? This video is split into 4 sections. How sales comp works, how attainment works, comp plan examples, and questions to ask in an interview. And if you want to support me making more videos like this, there are 3 free ways for you to actually show some support. One is to hit the like button on the video right now. Another is to subscribe to the channel. This channel is mostly business and sales type content, as well as ringing the bell there. And the third free way to support the channel is I linked a book in the description of this video. It's called New Sales Simplified. It's on prospecting and developing new business, a book of business and sales. And it's a really good book if you want to check that out, but just simply going down there and clicking on that link gives me a referral. So feel free to do that. It's a free way to support the channel. All of this stuff is super helpful. Liking, subscribe, click on the link. All right, let's get into the video. How sales comp works. Comp plans are the way you get paid in sales. They're a contract between you and your employer that cover salaries, commissions, and payment terms. In software sales, you can be expected to sign a new comp plan maybe once a year or even as often as every 6 months. Your compensation and the way you make money can change as time goes on. So it's sort of expected to be signing new comp plans every so often, and sometimes it doesn't fare for you as well as your last comp plan, and that's just normal. It's sort of expected. There's a lot of different types of comp plans, but by far the most common one is called a 50-50 split. There are 2 components of this comp plan: a base salary that you're going to make just like every other employee at the company. It's just your straight up salary, which is 50% of your expected earnings. And then the other expected is known as the variable. Basically the same thing, it just means commissions. There are different variations of 40-60, a 70-30. It just depends on the company you work for, and 50-50 seems to be the most common. Here's how it works. Let's say you have a $100,000 salary on a 50-50 split. So that means that you'll have something like a $500,000 sales quota for the year, and the first $50,000 you will just earn throughout the year. Even if you do nothing at all, your paychecks will just be that $50,000 at the end of the year. And as you sell through the year, you're expected to reach that sales target or quota of $500,000. And once you achieve that, you will have earned 100% of the variable in your salary. So the other $50,000, making you earn $100,000 total between the 2, base and your variable. If you only end up selling $250,000 for the year, which is half of your quota, you will only earn half of the remaining $50,000, $25,000. So $25,000 plus the $50,000 base, that means you'll earn $75,000 for the year. There are other styles of comp plans, one being no base, all commission. I wouldn't recommend that for most people. I hear a lot of stories about people promising their friends that they're making a ton of money in that model. I just haven't heard it work out for many people. There's usually a reason a company is not willing to pay you base. It might mean that they're not super confident in people actually being able to sell their product, and it also might mean that they could potentially have cash flow issues in the company. So be very weary about no base, all commission roles. There's a third type of comp plan called residual commissions. And this means once you close a customer, that customer is yours. And as long as that customer stays with the company, you will earn commissions every month or every year as long as they're still a customer. So you are closing new business, but you're also getting paid for the existing business that you've brought. I don't see a ton of residual commission plans out there. If you achieve your residual quotas, you're good. Basically, you're good to go for a long time. But if you get behind on a residual plan, it's extremely hard and oftentimes impossible for you to make up for the lost time. Usually you have to sign a new comp plan and start all over fresh. So also be wary of residual comp plans, basically. How attainment works. The only way that you actually make money from the comp plan is through attainment. All attainment means is you earning the quota. How much of that quota have you attained? Typically, the way you attain your quota is through ARR, or annual recurring revenue. This just means that the customer that you bring to the business is signing up to purchase software for 1 year. And that's the annual contract, and that contract will renew again next year. That first year that you sign them up for and you close that deal, that's the amount that will apply towards your comp plan. You don't often get paid for more than 1 year. So don't be surprised even if you close a 3-year deal, that you only get a commission on the first year. And if you happen to renew the customer next year, you might make another commission from that same customer, but otherwise it's just going to be commission for the first year. There's also a newer model called consumption-based attainment. And rather than you getting a commission or attainment for the size of the contract you sign, you get attainment instead for the amount of service the customer actually uses throughout the year. And this model of attainment has become more popular as cloud sales has become more popular. I'm actually on an attainment-based compensation plan and attainment right now. And because you don't get any attainment for signing large deals, you kind of change the way, as a rep, you change how you interact with customers. You're responsible for essentially everything from getting them in the door all the way to ramping the customer up on the service. So whenever the contract gets signed, that's just one step in the sales process, and closing the deal doesn't necessarily mean you're going to get your attainment. Definitely puts a lot more burden on the sales rep to carry out more, essentially some of the customer success and enablement stuff that happens after the sale. From the employer's perspective, it's very helpful because they never pay commissions on anything that doesn't actually get used. So if a sales rep closes something and the customer never actually uses it, which you'd be surprised, it happens, and it happens more often than you'd think, the organization never has to pay out the sales rep for that. And it also prevents customers down the road from churning. It actually makes the company have a more sticky interaction. Their customers stay customers longer. It's kind of a mixed bag whether it's good or bad for the sales reps. It's definitely more work for the sales reps. It definitely takes longer for you to earn your commissions because you actually have to wait for the customer to start using the service. On the other hand, it can be nice because some customers will use way more than you anticipated, or some customers might come out of the blue with usage that you didn't even know was going to happen. It's that sort of nice surprises. You get a nice little paycheck from that, and you're like, oh, I didn't even do anything for that. Like, you know, I mean, you did. You maybe worked over here, and then the commission came from over there. So it can balance out. So this model is just something to be aware of, and it's also really good to ask about this right now if you're going into interviews. Ask, has your company considered consumption-based comp plans? It both shows that you know a thing or two about selling software, but it also protects you a little bit because you want to know if they're planning on moving to consumption-based in the next 6 months before you accept any role somewhere. Comp plan examples. Regardless of the comp plan that you have, typically your quota will end up being about 5 times whatever your OTE is. OTE being on target earnings. This is basically your expected salary. A comp plan should be designed to encourage sales reps to do a certain type of behavior. So think about that when you're reviewing a comp plan. How does this comp plan motivate you to sell? What does this comp plan say about the organization's overall goals? Here's some examples of some earnings for a sales development representative and an account executive. You can see that the SDR has a lower commission and a lower target overall. Actually, the target is based on activity and not based on ARR. That's pretty standard for an SDR role. And it's also just good to be aware that SDRs generally don't make as much money as an AE. Then the account executive has a standard 50-50 split with an OTE of $200,000. The quota is actually 4 times the earnings, which is on the low end for a quota, but it's still entirely reasonable. Here is an example of a tiered compensation plan for an account executive. The main difference is that there is a monthly accelerator applied where if the AE closes more than $80,000 in a month, then the commissions are a higher percentage. This is what 12 months of earning would look like with this tiered comp plan. You can see in March, the rep closed $105,000 and the corresponding commissions at 8%, and then it bumps up to 12%, and then 15%. Feel free to pause the video right here if you just want to read the whole chart. It's really helpful to understand how this all actually works. Questions to ask in an interview. I always like to go over interview questions because I think you can find out so much information just by asking the right questions. So what do you ask when you're interviewing for a sales role? Well, ask about sales ops. How large is the sales ops team? How often do they calculate commissions? What does the commissions structure look like? What CRM do you use to track your sales and actually measure all this stuff? Then you can ask questions about the sales team themselves. How much of the sales team is actually regularly meeting their quota? That's an important thing to know. What is your best sales rep doing that no one else is doing? Why is that person outperforming everyone else? Finally, something that I would definitely recommend you ask is questions that will help you project the type of work or how much work you're actually going to need to do in this role. Let me explain. Ask what the average deal size is and ask the average time to close. If they can't tell you these numbers in a later stage interview, that is a red flag. These are numbers that sales management should know. And if you ask what percentage of opportunities close, meaning if you bring in 5 opportunities, will on average 1 close or 2 close, roughly. If you ask that and you have the time to close and you have the average deal size, those 3 numbers are great because you can now do back of the napkin projections or back of the napkin math. As an example, if the average deal size is $50,000 and on average 20% of deals close, if you have a $500,000 quota, you will need to bring in 50 opportunities to close 10 opportunities to meet your $500,000 target. Does that make sense? There are other considerations in sales, software sales, that it should be on your radar. When do you get paid? Do you get monthly commissions? Do you get quarterly commissions? Do you get commissions twice a month? When are the commissions actually calculated and paid out? Does the role have capped commissions or uncapped commissions? Meaning there's an actual limit to the amount of money you can make in this role, or it's unlimited, it just keeps going up and up and up. Does the company like to do spiffs? Spiffs are like a one-off bonus sort of situation where companies will incentivize a certain type of goal or behavior just to get people going, a little bit of internal competition, some healthy competition. They're actually kind of fun. Sometimes it's like number of emails sent, whoever has the most emails sent in a month or something, or number of dials, number of meetings with customers. There's all sorts of spiffs. Just be aware that it's another way to make money, and you can always ask, do you all do spiffs? Discounting. In software sales, you can discount. You can negotiate with your management what the discount should be for a customer. The problem is that the more you discount, the harder it is for you to reach your target. So it's a balance. There's a whole conversation we could have about discounting. So we're not going to get into too much, but just be aware that discounting is a thing. Renewals versus net new customers. A lot of times when you take on a sales role, there will be a certain percentage of renewals that you're responsible for, plus bringing in net new customers. Knowing what that ratio is going to be and how much time you're going to spend on renewals and how much money you can make from renewals is a good thing to be aware of. If you can't make a lot of money from them and they're a time hog, that's not a great situation. I know I just threw a lot at you. This is the real world of software sales, so I hope you appreciate the fact that I'm just laying it all out there. Again, hit the like, hit the subscribe. Let me know that you like this type of video, and I'll definitely make more. If you have questions of stuff that I didn't cover, go down in the comments, leave a comment there. I read each and every comment on my videos. So expect a response, or if I know the answer, I'll just give you the answer. With that, all right, click the link in the description. All right, see you later. Bye.